Stock option trading. One call option jumped over 3 times the capital in 2 days. After watching this video until the end, you're gonna know how to choose a call option and how to trade call options. Welcome to World Traveling Millionaire Stock Investor and Option Trader channel. So I posted my videos on Patreon, my $1 million plus portfolio, my favorite 16 stocks. So if you are a Patreon member, you haven't watched it, go ahead and watch it. I've never reviewed this before, so this is my first time, and this may be possibly one of the very few times I show you my whole private portfolio. So this is SE call option, okay, 140 strike price. Experience date is February 20. So right now it's January, so it's 30 days, no? Around 30 days experience date. So why do I choose 30 days call options? Because it can be volatile, quite pretty big. If the stock goes up a little bit, it will go up a lot more. If the stock goes down a little bit, it will go down a lot more. But I chose this because this stock has been showing uptrend, like serious uptrend recently. So I traded that call option 4.18. So if you have $418, you could have bought just one call option. So one call option represents 100 shares. 100 shares. So that's why you have to multiply 100. So 4.18 means multiply 100. You just need to pay 418 to buy one call option. That was on January 2nd, 2026. I traded. I sent out an alert to my option trader Patreon member. So within 1 day, it jumped 143%. So more than the birds. So 2.5 times. 2.5 times. So 10.5, 10.15. Okay. So hey, that's pretty good deal, right? The reason why it jumped a lot is because of the shorter duration. So if I had chosen like 1 year out, 2 years out, it may have probably jumped maybe 40%, right? 30%. It may not have jumped 143%. So that's one important concept, choosing shorter duration time. Of course, there's always a risk. If you believe that the stock gonna go up, and if it doesn't go up and it goes down, hey, you could have lost that $418. The premium is smaller. Of course, that's one positive. The longer durations, leap options, the premium is much bigger. It could be a few $1,000s, right? A few thousand, but you have a higher chance, longer time, that your prediction is gonna be right. Because as long as you choose a great company, hey, the longer durations could perform really well. So even if you bought lead options, right? So if it jump, the stock could jump 4%, 5%, it could stay jump 30%. Really good deal. You could just sell it right away. You don't need to hold for 1 year. So I like to buy both options, shorter and longer at the same time, just to diversify across time, right? To minimize the risk. So in this situation, I signed out a lot for a shorter duration. I bought a shorter duration for SE. Hey, within 1 day, 143% jump. So within 2 days, this is where magic happens. 2 days, 235% jump because the stock went up 2 days straight, right? 2 days straight. Before that, it was also going up too. So that was consistently going up, you know. So that's why trading shorter duration could be pretty lucrative. So if you see stock just jump 1 day, or if it doesn't jump the next day, it may not be the right stock. But if you have been seeing this stock for like 2 or 3 days, it's been going up. It's a great company. Remember, the secret is gonna be a great company. Okay, a great company. You don't want to do that with a penny stock. You don't want to do that with a speculative stock. That can go down anytime and it may never come back up. Okay, so great companies have a higher tendency to go up their stock price. So that's why I always use call options, buy call options on great companies. So 235% gain, so more than 3 times the amount. Okay, so I initial capital, how much was it? $418, right? Of course, you could have bought it at $5. You could have bought it at 4 by 2. Doesn't matter. This is an example. But even so, even if you bought it at 5, yeah, you could still be making a lot of money. Okay, 418. Then now $14, so 1,400. Right. Once it hit at the top, if you see the sign of going down, you want to take profit. You don't want to wait too long because this is a shorter duration. Shorter durations can fluctuate a lot. So once you are having 200% plus gain, even 100% plus gain, you want to take it. Nobody goes broke by taking profits. Okay, this is very important. Nobody goes broke by taking profits. So even if you take 30%, 40%, then you will still be making profit. Of course, if you cut loss, the sooner you cut loss, the better it is, right? Of course, you take profits only 10%, but you cut loss at 50%, you will most likely gonna lose money as a trader. You don't want to do that. You always want to put 2 times. The profit target will be 2 times then the loss target that you want to cut loss. Okay, so if you plan to cut loss at 10%, you can take profits 20% above. If you tend to cut loss at 50%, take profits at 100% longer, right? But if you have been looking at the sign consistently, then your chance of making the right call, the right predictions, is higher than 50%. So over time, then your win rate is gonna be higher than your loss, and your win amount could be higher than your loss amount. So once these two happen, you make profits consistently. Okay, 235% gain in 2 days. So why do I show you this stop? Because this could be going up too. The past month 4.27%. The 6 months, the past 6 months is down 12.17%. Year to date is up 2.13%. Past year, look at this. It used to hit $196 in September, right? In October too, $180. So it's just went down like crazy to $120. $120. Now it's coming back up. It's only halfway, not even halfway yet. So it could keep going up. So that's why I want to give this to you as a gift, New Year gift. Okay. So of course you could choose a longer duration, right? Don't buy the same expiration date because you could lose money because it's coming up pretty soon. And this stock is pulled back a little bit. So one day it went down a little bit, so it could pull back. You see, it's very normal to pull back. But you see, the thing is that the past 5 years it has been down. It used to be over $200 stock. So if the stock goes back up to the previous high 3 times the amount, if you buy lead options, hey, the lead option could be much higher. The profit could be much higher. Of course, this is not a financial advice for you to buy or hold or sell this stocks or options. Okay, so I'm just thinking out loud. I'm just giving you my professional opinions, educations. You see, yeah, this could go back up too. So yeah, I like this stock personally. So I trade call option on this stock as well. Hey, how do you know which is a great company? You can learn about it. Go to Master Risk Stocks Option Crypto playlist. You can look at Nvidia stock, Palantir stock, and you can learn about it in stock investing. There's a playlist called Stock Investing. Stock investing is where I talk about basically how to choose, companies and great companies. And you can go to the live too. Usually every week I talk about it. Every weekend I talk about what stocks gonna be coming out soon and what's called reported earnings, stuff like that. So if you want to reach out to me, you can reach out to me in the YouTube description and comment down below. Share, subscribe. I will see you in the next video. Bye bye.